In this series of subsidiary books, now we are going to discuss the sales book. So, the sales book, like the name suggests, all the credit sales of the goods, all credit sales of goods dealt in by the firm are recorded in a separate register called the sales book or the sales journal. Like cash purchases, cash sales are recorded in the cash book and not the sales book. Only credit sales of those items that the company deals in will be recorded in the sales book. If not any other sale happens like sale of assets, that will be recorded in the journal, but not the sales book. So all credit sales of goods are recorded in the sales book and entries are recorded on the basis of invoices. I repeat again, credit sales of items other than goods traded in will be recorded in the proper journal and not the sales book. And cash sales won't be recorded in the sales book but in the cash book. And whatever total that you will get in the sales book, that will be transferred to the sales account in the ledgers and it will be posted on the credit side. Sales book reduces the volume of work required to pass journal entries for every credit sale, and ledger posting also becomes easier because all the credit sales are recorded in one book. It is easier to check our creditors also. And we will have a periodic total of credit sales. So let's solve an illustration to better understand how to make a sales book and the corresponding entry in the sales account. The following are some transactions of Messrs. Kishore and Sons as per the waste book. Okay, make out their sales book. So they have sold to Messrs. Gupta and Varma 30 shirts at 150, 20 trousers at 300 with a trade discount. Okay, so this will come in my sales book. Sold old furniture to Messrs. Seghal on credit at 800. This won't come in my sales book because we are selling furniture which is an asset and it's not the goods that Messrs. Kishore trades in. Okay, next one. Sold 50 shirts on credit to Messrs. Jain. We will record this. Sold on credit to Messrs. Mathur and Jain 100 shirts at 175. Okay, even this will be recorded in our sales book. So when we make the sales book, this will be our format, and on top we will write in the books of Messrs. Kishore and Son. No dates have been given, so we can directly write. So first one is Gupta and Varma. 30 shirts at 150, 20 trousers, I'm gonna write pants, 300. So 30 into 150 is 4,500 and 20 into 300 is 6,000. So that gives me a total of 10,500 less trade discount at 10%. So that will be 1,050. That gives me an amount of 9,450. Okay, now in my next transaction, like I said, furniture won't be recorded because that's not the goods that Kishore deals in. My next entry will be of Messrs. Jain and Sons. So I will write here Messrs. Jain and Sons 50 shirts at rupees 150 each. That gives me a total of 7,500. Since I don't have any trade discount, I'm not giving any discount. I will directly write it in my net column. I won't have any gross computation. Now my next transaction will be sold on credit to Messrs. Mathur and Jain. So I will write Messrs. Mathur and Jain. What have we sold them? 100 shirts and 10 overcoats. Okay. 100 shirts at rupees 75 each. At 175 each. So that gives me a total of 17,500. And 10 overcoats at rupees 500 each. So that gives me 5,000 rupees. In total, 22,500. Now, we are also offering a trade discount. How much? 10%. So less trade discount at 10%. 2,250. That gives me a total of 20,250. So, my total to sales account will be, how much would it be? 9,450 plus 7,500 plus 20,250. That gives me a total of 37,200. This amount will be posted in my sales account. In sales account on my credit side, I will write buy sundries as per credit sales. In my sales account, I will write buy sundries as per sales book. So let's see. And I will also create corresponding ledgers for the names of Mrs. Gupta and Verma, Messrs. Jain and Sons, Messrs. Mathur and Jain, and a sales account. So I will be opening totally 4 ledger accounts. My first account will be in the name of Messrs. Gupta and Verma. Usually, what would the journal entry for a credit sale be? Creditor account debit to. What would the journal entry for a credit sale be? Debtor or customer account debit to sales account. So in the ledger account of Messrs. Gupta and Verma, I will write to sales account rupees 9,450. I will directly record the net amount. Similarly, I will open account for Messrs. Jain and Sons. To sales account 7,500. Messrs. Mathur and Jain to sales account 20,250. And in my and in my sales account month end, I will write buy sundries as per sales book. The total. I will enter the total amount. Okay, so that is 37,200. So pretty straightforward how we make a sales book. We will only record credit sales of those goods that the company deals in. And in our sales account, whatever total that we get in the sales book at the period end, we will record it on the credit side. with this statement saying buy sundries as per sales book 37,200. Now let's see the sales return book. Sales return or return inwards is maintained to record those goods which are returned by the purchaser, and also these goods had to have been sold on credit. And whenever a good is returned, whenever we are getting sales return, a credit note is created. Credit note is a document evidencing that a credit entry has been made. Let's do an example so that you will understand very clearly. Record the following in returns inward book and post these transactions into the ledger account. Okay. 2015 January 1st, Ramesh ko returned 500 units sold at 50 rupees per unit. Okay. 2015 1st Jan, Ramesh and Co. 500 units at rupees 50. Rupees 50 per unit. So I will directly write in my net column, that will be 25,000. Then my next transaction is, on 25th Jan, Naresh and Co. They have returned 300 units at rupees 55 per unit. So 300 into 55. That gives me a total of 16,500. And on 31st Jan, sales return account, I will add 25,000 and 16,500. So my total is 41,500, which I will post in the sales return account. Now you must have understood, like in the previous cases, we will create ledger accounts for Ramesh account, Naresh and sales return account. Ramesh and Co. Now what is the journal entry for a sales return? It is sales return account debit to debtor. Okay. Why are we debit? So sales return, now you must have understood, has a debit balance. Why does it have a debit balance? Because what goods we have sold is coming back to us. In a way, it is a loss for us because our sales is reducing. Our sales is getting reduced by the goods that have been returned. So it is a kind of a loss, and that is the reason it will be a debit balance. It will have, and that is the reason it will have a debit balance. So Ramesh company, I will write my date 2015 1st January. To sales return account. Oh, sorry. Cut. So in my Ramesh company account, I will write 2015 1st Jan. By sales return account, 25,000. Then in my next ledger, which will be for Naresh and Co, 16,500. Two 2015 25th Jan, by sales return account rupees 16,500. And in my sales return account. So note, sales return book has a debit balance. So on 31st Jan 2015, I will record this on my debit side. 31st Jan, two sundries as per sales return book. Two sundries as per sales return book. The total, I will enter the total, which is 41,500. Okay. So now so this was the concept of the sales return. Let's just do a quick summary. For my purchases account, for my purchases book, my sundries as per purchase book will be on the debit side because purchase book has a debit balance. Similarly, for my sales book, sundries as per sales book will be posted on the credit side. Why? Because sales book has a credit balance. This is the summary of the subsidiary books that we have seen till now. Our purchase book, sales book, purchase return book, has a debit balance. Purchase return book has a credit balance. And sundries as per purchase return book will be posted on the credit side, as you can see from this example. It will be posted on the credit side. Why? Because we are returning goods that we have purchased, so our expense, our liability is reducing. So that is a sort of saving for us. We can, and any income or any gain will have a credit balance. Similarly, sales return book will have a debit balance, and sundries as per sales return book will be posted on the debit side. This was the video dealing with subsidiary books in specialty, sales book and sales return book. Now we are left with only one subsidiary book, which is the journal proper. That's all for this video. See you in the next one.